All right, let's get right into it. We are standing on the edge of a genuine revolution in how we get around our cities. It's this whole new world called urban air mobility. And right at the front of this incredibly high-stakes race, you've got two major players, Archer and Joby. They are both fighting to be the one to rule the skies above our heads. And believe me, this isn't some far-off sci-fi dream anymore. It's a multi-billion-dollar fight happening right now.
And this quote, it just perfectly nails the vision, doesn't it? I mean, just imagine pulling out your phone, tapping a button, and summoning an electric air taxi to fly over all that gridlock. A commute that takes an hour could turn into a 10-minute flight. That's the promise. That's the dream that's pulling in billions of dollars in investment. It's the ultimate game changer for city life. So, that brings us to the main event, the flying taxi race. In one corner, you've got Archer Aviation, and in the other, Joby Aviation. Now, both of these companies are giants in this new eVTOL world, but, and this is the important part, they're taking completely different roads to get their flying machines off the ground. Now, just in case you haven't heard the term, let's talk about eVTOLs for a second. These are the incredible machines at the center of this whole thing. The easiest way to think of them is like a mix between a helicopter and a small plane. But they're all electric, they're way, way quieter, and they are built specifically for these short little city hops. The goal here is huge but simple, to finally solve the nightmare of city traffic by just flying over it. So here they are, our two contenders. On the left, we've got Archer Aviation. Their whole identity is being the manufacturer. They want to focus on building the absolute best aircraft and the most efficient production line. Then you've got Joby Aviation, who are building the rideshare platform. They want to be the full-service, vertically integrated Uber of the skies. See? Two very, very different ways to chase the exact same prize. Okay, so let's follow the money. Neither of these companies is fully commercial yet, but the stock market, it is already placing some massive bets. And the hype? Is, well, you can feel it. The numbers we're about to see tell a story of incredible excitement, but also some pretty serious risk. First up, let's talk about Joby. As of mid-November 2025, the stock is up over 200% for the year. I mean, wow. A jump like that for a company that's not even fully selling its service yet, it just shows you the insane level of excitement from investors. The market is basically screaming that it believes in Joby's rideshare vision. And then you have Archer. Now look, a 50% gain in a year is fantastic for almost any company. But when you put it right next to Joby's 200%, well, it tells a different story. It suggests that investors might see a different timeline, or maybe a different level of risk for Archer's let's build the plane strategy. So let's put this all side by side. The big picture is that both stocks have had an amazing year. But it has been a super bumpy ride. You can see Archer's around $8 a share, Joby's closer to 15, but check out that recent volatility. Archer drops 27% after its quarterly report, and Joby was down at 9% on this one day alone. It just proves how sensitive these stocks are to every little piece of news. The hype is real, but so is the risk. Okay, this is where we get to the real heart of the matter. This isn't just a race to see who has the coolest aircraft. Nope, this is about two completely different business plans. Two different philosophies on how you build a company that's going to dominate this brand new industry. Pay close attention here because this is the most important slide. Archer's whole game plan is to become the best manufacturer out there. Think of them like the Boeing or Airbus of this new era. They design, build, and then they'll sell or operate their aircraft. The idea is to control the whole manufacturing process to get the best profit margins. Joby? They're going a different route. They're building the whole consumer service from the ground up. The plane, the app to book it, the pilots, everything. They want to be the brand you think of for air taxis, just like you think of Uber for cars. And to really get Joby's plan, you gotta understand this concept, vertical integration. It sounds complicated, but it's not. It just means they own every single step of the process. They make their own planes, they write their own software, they run their own operations. Why? Because they think it gives them total control over quality and lets them keep more of the profits instead of sharing with partners. It's a bold play for total market dominance. And this leads to a huge advantage for Joby right now. They're not just some pre-revenue startup. They're already making money. They've got contracts with the Department of Defense. They've got partnerships like the one with Blade, where they've already flown over 40,000 passengers. And look at that. They brought in over $22 million last quarter. Having that cash coming in the door already, that's a major head start. You know, a great strategy on a whiteboard is one thing, but making it happen is everything. So now let's look at the actual real-world progress each company is making. We're talking flight tests, factories, government approvals, big deals, all the stuff that turns these grand plans into a reality you can actually see. And Archer has been busy, hitting some huge milestones. They just finished a flight test of their main aircraft, the Midnight, all the way out in the UAE, which shows they're thinking globally. They've got a deal with Korean Air for 100 planes. Their new factory in Georgia is starting to churn out vehicles. They're moving along with the FAA. And they're even buying an airport in LA to be their first hub. They are physically building out their network piece by piece. But Joby is absolutely not sitting on its hands. Their prototypes have already flown over 30,000 miles. That is a ton of real-world flight data, which is crucial. And look at this. They are farther along in the FAA certification process, having already finished 3 of the 5 major stages. They're hitting military milestones, growing partnerships with big names, and are even delivering some aircraft models. Joby is proving their technology is ready for prime time. So, you might be asking, why is this race so fierce? Why are investors throwing billions of dollars at companies that won't have a mass market service for a few more years? Well, the answer is all about the size of the prize. We are talking about completely redefining how we move around our cities for the next century. And this is the number that gets everybody's attention, $1 trillion. That is the insane size that analysts think this whole urban air mobility market could reach by 2030. When you're talking about a brand new market that big, the companies who get there first, like Archer and Joby are trying to do, are fighting for a truly mind-boggling prize. And here's what that prize could look like once they get up and running. Archer is projected to hit over $500 million in revenue by 2026. Not bad, right? But now look at Joby. Because of their ride-sharing model, analysts think they could scale even faster, potentially hitting $1 billion in revenue by 2027. That is, if they can get people like you and me to start using their service. Now, to build that future, you need a mountain of cash. And this chart shows their war chests. Archer's got about $500 million in the bank. Joby has even more, with over $800 million. So what's the takeaway? Both of these companies are funded really well for the next couple of years. They have enough cash to keep developing and get through that certification process without having to rush out and raise more money right away. All right, so we've covered the tech, the business plans, the progress, and the massive market they're chasing. So what does this all mean for someone thinking about investing? Let's break it down and look at what Wall Street analysts are saying. So here's the consensus from the pros. For Archer, the average analyst thinks the stock could go to $12.50, which is a nice jump from where it is now. And the really optimistic ones see it hitting $18. For Joby, the average is around $14, but some of the bulls think it could go all the way up to $22, especially if they get good news on their FAA certification. So let's turn that into a potential game plan. In the short term, a trader might look to buy Archer if it dips below $7.50, with a target of $12. For Joby, maybe an entry around $13 with an eye on $18. Now, looking out a year or 3, as Archer gets its factory going and Joby grows its service, you could see targets in that $15 to $25 range. And long term, well, if Archer becomes the king of manufacturing, maybe it's a $30 stock. If Joby wins the rideshare war globally, you could be looking at $40 or even more. But we have to end on this. It is the most critical point of all. All the projections, all the hype, all the incredible technology, it all comes down to one thing. Both of these companies have to get full certification from the FAA to operate their service. The magic year is 2026. This is the biggest hurdle and the biggest risk for everyone in this space. Without that stamp of approval, this whole dream stays stuck on the ground. So that brings us to the final question. Which future are you betting on? Is it Archer, the master manufacturer, building the planes that will power this revolution? Or is it Joby, the sleek ride-sharing service that wants to own the entire customer experience? The race is on, and for these two companies, the sky is literally the limit.